So the fund was up approximately 2.5% over the last quarter, slightly underperforming global markets, but a positive return nonetheless. And then over the full year to date, we're up currently 8.8% versus a market that's up less than that. So we're quite happy with our performance. We're keeping up in this bull market. So some of the best contributors over the last quarter was a company called Investors Cloud. Investors Cloud in Japan was the #1 contributor. The number 2 contributor was a company called Alstom, which has been bid for under a merger with Siemens. So this is a French-listed rail manufacturer. On the other side, one of the largest detractors was our Pakistan exposure. As many of our viewers are aware of, we've been a bull on Pakistan for a number of years. Our release of the Panama Papers, unfortunately, has seen a number of political machinations take place there and the resignation of the President and Prime Minister. So we were stopped out of our Pakistani positions and they were our largest detractor over the quarter. We continue to remain bullish on our outlook. As our readers and viewers know, that we've remained fully invested over the last 12 months. And even in the backdrop of negative news last year, we remained relatively bullish. From here, we think markets continue to go higher. How much higher? Who knows? The back end of a bull market can see things go really high really quickly. Though, as always, we remain focused to see if there's things are deteriorating, if our view's not working out. Our base case at this stage is that markets remain on their upward trajectory until probably Q1 of next year, maybe Q2. It's always a little bit hard to say in advance exactly when these things end. But by Q2, Q3, you should see things slowing down somewhat, particularly if the Fed's raising rates. If none of the central banks raise rates, well, then things are likely to carry on as they are. So the backdrop's relatively bullish at this stage. Most people thought New Zealand would actually stay middle of the road outcome. The economy's been performing very well. And to the surprise of nearly everyone involved, they've formed a minority government with Labor, who only got 35% of the vote, forming an alliance with 2 other parties to actually take control. And as a result, what you've seen is the Kiwi dollar fall very heavily on the back of this. They're going to impose a number of changes to immigration rules. They're going to impose a number of changes to tax rules, negative gearing. And what this means, though, is if you're a Kiwi investor and you've been invested locally on the assumption that things weren't going to change, which looked fairly a good assumption up until 4 days ago, you've now seen a substantial depreciation in your local base wealth. And I think this can apply for Australia as well. We have Labor Party in lead. You've seen populist things have won out globally as well. And so the risk here for Australian investors is if you're assuming everything stays as a status quo and you don't have enough money invested offshore, you could find you get a nasty surprise in 2 years' time. So, we're a global investing house and we always recommend people have a portion of their assets offshore. And I think if nothing else, the Kiwi election just sort of reminds you why you should always have that.